Kitco News special coverage of Bitcoin 2022 is brought to you by Coin Payments. Crypto payments made easy.
We're talking about the history of money and how far we've come from coins all the way to digital assets and the importance of ESG with Akbar Shamji. He is the CEO and founder of BitZERO.
Nice
New
to see
kid
you.
on the block. Very important work that you're doing. Nice to see you too.
Nice to
Thanks
see
for
you.
being on the
Nice.
show. Your company is going to be listed soon on the NEO exchange. We'll be talking about your company and all your operations. First, I want to talk about money. You told me offline you're a historian by trade. Not often I get to interview a historian. Tell me about the history of money. Is a very broad subject. We don't have 4 days. But let's just start with how fiat currencies have played a role in shaping our current economic sort of regimes around the world that you see today. Fiat, I believe, is a word that derives from the Latin word for decree.
Indeed. And it's a decree of trust. So money, conceptually, is trust between humans. Of course, governments used gold to underpin that trust, and then they pulled the gold away. But nevertheless, the trust had remained until quite recently in fiat currency. But trust between humans across trade has to happen. And, from the Knights Templar right at the beginning, there was trust. Now, the great thing about the blockchain is that it's the first innovation in human history for the last 500 years within bulletproofing that trust. So if you think about accounting systems, we had single entry accounting in the caveman era, where I have a cow and I write it down on my clay tablet, one cow. Then 500 years ago, roughly, double entry accounting. I've got 3 pieces of gold, 3 cows, balanced balance sheet. And then, of course, came all the fraud and chaos. But now, triple entry accounting across the blockchain is impenetrable to that kind of fraud. So the history of money has changed in the last few years to the transparency and accountability of the blockchain.
Throughout the course of history, we've also seen, I would say, the diminishing of government powers from complete monarchies and autocracies to more or less republics and democracies that have governed most of the Western world today for the last few decades. How has the role of money played a part in the transition between autocracies to democracies?
Well, if we think about the emancipation of serfdom, slavery, the freedom for the largest numbers of people to have self-determination and kind of control of their own financial destiny, that was very much a function of government money supply, policy and regulation. And what's happening very quickly now in real time as we become a much more global society is that the hegemony, the right and sort of the auto right of centralized governments to control that money supply is dissipating. It's incredibly complex to write government monetary policy, so I won't say there's been mismanagement, but for the duress of managing society, even the most important governments have started just printing money. And that can't happen with the blockchain. So the positioning of government within a blockchain universe now is to create a policy that allows society to flourish and allow government to keep contributing its core functions, but government's control of money supply is something that government has to contemplate now, because policy and regulation must be delivered within kind of blockchain currencies, but government will lose some control, but they have so much to gain, and I think they're starting to realize that, which is great.
Well, we've also seen the advent of central bank digital currencies, which some argue is the government's way of regaining some of that control that may be lost through cryptocurrencies.
So if the national digital currency is not as visibly quantifiable in terms of its sort of volume distribution as, for example, Bitcoin, then it's likely to suffer the same loss of kind of trust as the fiat currencies are suffering now. Whereas perhaps pegging national currencies to the Bitcoin will sort of be the future of how countries trade with one another.
Throughout the last 100 years or so, we've seen several mass migrations of capital. So after World War II, we've seen a lot of European capital flow to, well, actually global capital flow to North America, in particular the US. Since the 90s, we've seen capital flow towards China and the Far East. Is Bitcoin and cryptocurrencies the next destination for capital migration, you think?
Well, I think it goes back to policy. So as policies become clear around acceptance of Bitcoin within the legal framework of the major economies, right, and institutional capital and ultra high net worth capital join the sort of retail and entrepreneurial capital that's already in Bitcoin, then I think Bitcoin becomes a very clear destination for huge redeployment of capital.
Speaking of policy, ESG is a concern for a lot of people. The governments, particularly the European Union, recently discussed, they haven't really, but they discussed banning Bitcoin because of ESG concerns, because of concerns that Bitcoin is polluting the environment, harming our ecosystem. Are they right?
Well, to a degree, all of the huge energy consumers within digital society are a challenge to the climate. And I come from a renewable energy policy creation and plant development background. So yes, certainly a lot of energy has been burnt towards the development of the Bitcoin industry to date, and a lot of that has not been well thought through. But I think that the regulators are now pouring attention onto taxation and regulation around that kind of power use, and next generation miners such as ourselves are not only using 100% zero carbon displacement clean energy, but also contributing back to the local societies where we build our data centers. So I think the long term is a very bright picture.
So tell us how you're doing that.
Well, in order to bring down energy costs in a sustainable manner, data center owners, miners have to cooperate and collaborate with local governments and deploy capex to expand renewable capacity. By doing that, you can fix your cost of energy for an extended period of time at a very low level and not be subject to the rising power prices that everybody else in society is suffering today. So you have to do a little bit of analysis, you have to take a breath, you have to deploy some capital, and then you have a long, clear runway to very clean, low-cost data center management, Bitcoin mining, whatever you might be doing with that energy.
Okay. Well, specifically, how does your company, I guess, comply with the newest ESG regulations?
Well, I think we don't only comply with them, we're driving them. So follow the concept for a moment, zero carbon displacement. This means that not only is there no carbon in the supply to any facility we develop, but we are also crystal clear that by using the renewable energy that we are using, we have not denied anybody else the right or access to renewable energy that government is providing. So governments have decided, very difficult job to decide it, even harder to implement, to take taxpayer money and bring energy consumption in society to zero carbon by 2030 or 2040, whatever it might be. So government is deploying a lot of money to make this possible. Now, private sector energy consumers, whether it be gaming, adult entertainment, or blockchain, can grab that capex and use the renewable energy for their own capital benefit. And then what happens to the rest of society? So governments deploy the money and private industry takes out the renewable. That's not kind of in line with the overall strategy to be a zero carbon society. So what we do and what we encourage others to do is partner with government, and governments are increasingly open to those public-private partnerships and unlock trapped energy that government has developed historically and or bolt on to existing government programs to expand new government energy development projects so that you can have your own private proprietary long-term low-cost renewable energy and not be taking it away from society.
Okay. What kind of renewable energy are you using?
Well, we've been very much focused on hydroelectric, and mostly that is in the north of Norway.
Okay. Is that a sustainable form of baseload energy?
Yeah, it's perfect.
Okay.
It's 24/7, 365.
So there's no risk of intermittent energy loss?
Zero downtime.
Right, okay.
Nuclear will provide the same.
Right.
And otherwise, a blended mix of
Yeah.
wind, solar, and battery will take us there also, and hydrogen projects in due course will move also.
Interesting. So is your company more focused on the construction of the hydropower itself or the mining aspect?
I think both things are entirely concurrent
Okay.
and mutually critical.
So you, just to be clear, you don't offload the generation to another company. You actually do the generation of electricity yourself.
Well, we partner with government
I see.
in a sort of cooperative manner, so we generate and or do high voltage electrical engineering to
Yeah.
bring our own power to ground.
It's a hydro dam in Norway, I presume?
Yes.
And that dam is used exclusively for your mine?
No. So in the 1950s and 60s, the Norwegian government built an enormous amount of hydro capacity, far more than they use.
Right.
But they didn't bring it all down to low voltage because they didn't need it.
Yeah.
So we partnered in to do that electrical engineering to bring from high to low voltage, which was time-taking and expensive. And so, we started deploying capital 18 months ago. We only started mining in December of 2021. However, we now have a very clear runway to 300 megawatts at that very site, which will allow our growth of mining output to be sort of exponentially quicker than any of the historic miners. And further towards that, we will not use all of the power we generate for Bitcoin mining. It'll be a diversified portfolio of use.
Well, some would argue that ESG, we're complying with ESG and making energy generation completely carbon-free is more expensive overall. The capex required to produce energy is higher. Wouldn't that put pressure on, I guess, the Bitcoin ecosystem? Because if the price falls down to a certain point, presumably the miners would not be able to afford to mine Bitcoin, right?
So that's a very fair question, but it's quite the opposite.
Okay.
So within the predictability of power pricing over the next 1, 2, 3, 4, 5, 10 years, if a miner or a data center operator is mixed up with a national grid, there is volatility and unpredictability within that pricing that is kind of unsustainable or untenable when compared with the very clear super low cost of renewable energy once the initial capex has been made. So if you build a hydroelectric dam or a nuclear power plant, you've got electricity indefinitely for almost nothing. So if government is building hydro dams and private sector add a component to that for themselves, then we're not subject to carbon taxes or volatility in pricing. We have proprietary supply. The levelized cost of energy from proprietary energy generation is very clearly medium and long term way better for a data center operator or a miner. The challenge for the miners is they've come from an industry and a background where it's as many miners as possible, as quickly as possible, and as green as possible. But that's no longer tenable. You have to take control of your energy destiny today, otherwise you're going to have a problem. Grids are going to collapse, as they keep doing during high seasons. Government policies can change, carbon taxes can come. The downward pressure on power prices can only be brought by intelligent capex and public-private partnership, and that's where data centers and crypto mining are clearly moving.
Well, let's talk about finally your outlook on the crypto industry. We've come a long way since cryptos where Bitcoin was first used to purchase pizza. Now we're talking about country adoption of Bitcoin. What's next, do you think?
Well, it's becoming not the sole reserve currency, but it's becoming a reserve currency. It's the only quantifiable and predictable store of value which has the full trust of society across the planet. Remember the blockchain, the triple entry accounting that creates a bulletproof trust within exchange and trade between humans. It's all there in the Bitcoin. Only this many will ever be produced. You can see the background of every single coin and every transaction is visible. There's nowhere to go. And then, of course, there are some incredible other crypto software value storage tools, coins, which have incredible capacity to carry all sorts of additional information and functionality within different sectors of economies. So, governments are moving all their information storage to blockchain, and
You brought up the key word, which is trust. And I'm just going to, you said that, it has the trust of society. I'm just going to challenge you slightly on that, Akbar, because there are several critics of Bitcoin that would argue that Bitcoin has, cryptos are large, but I'm just going to focus on Bitcoin, but there are many risks to holding Bitcoin, such that, for example, Bitcoin could be banned by governments or whatever jurisdiction you're in. If you're in China, for example, it's already happened. Bitcoin could, Bitcoin has a lot of price volatility that may, some would argue, disqualify it from being a store of value. Bitcoin could be, taken off the grid if your infrastructure falls apart. You can't access Bitcoin if there's no internet or electricity in the jurisdiction that you're in. So some people still prefer physical assets like gold or silver, or perhaps even fiat money that's more widely used around the world. How would you, what would you say to people who have doubts about holding Bitcoin?
Well, I think if you break down each of those categories, gold, silver, fiat money, electronic fiat money, crypto, you start to arrive at an intelligent blend of kind of financial assets that can create security for any investor or investment house. So, the physical transfer of physical gold is complex. Same with silver. The electronic transfer of any of those assets is subject to the same risks as Bitcoin would have. If global internet communication systems went down, the whole thing would collapse. Yes, Bitcoin also. So a few gold coins under your pillow is not a bad idea to trade in case of a problem, as with the paper. But to have a position in all of those assets is probably the most intelligent way to deal with a very volatile planet that we live on.
Deep thoughts, Akbar, and I do appreciate your time. Best of luck with your company. Let's follow up when your company goes public.
Yeah, I'll see you in a couple of months to give you all the news, man.
Akbar, thank you so much for coming to the show. Thank you for watching Kitco News. I'm David Lin. Stay tuned.
Kitco News special coverage of Bitcoin 2022 is brought to you by Coin Payments. Crypto payments made easy.